What's up everyone, welcome back to Kirk's Corner episode 2. If you watched the first video, the answer to the corny joke was tulips, so if you participated, thank you, and I hope you got a kick out of it. Last episode we talked a little bit about stock screeners and what it could do for you. Hopefully you learned a little bit of what they can do, and hopefully you can use it sometime in your future. So in this video I would like to take a step back and kind of review personal finances, what that means, how does it apply to you, and how you can take control of your own finances. The first step in personal finances is do not live above your means, right? So don't live paycheck to paycheck. There are several ways that you can avoid living paycheck to paycheck. I'm sure a lot of people watching this like, oh, Bono, we don't live paycheck to paycheck, move on. But there are those out there that live paycheck to paycheck, and I just want to give some tips on how you can get out of that if you're kind of in that rut. First tip on not living paycheck to paycheck is review your subscriptions. Right? There's tons of subscriptions out there that everyone has: Hulu, Netflix, Spotify, Lightroom, HBO Go. There's tons of them. Gym memberships. So what you should try to do is narrow down your subscriptions. If you have, Disney Plus, Hulu, and Netflix, well, which one do you use the most, right? If you use Netflix the most, then get rid of Hulu and Disney Plus, because then that's almost $20 a month wasted on subscriptions you don't really use. If you use Spotify, why do you use Spotify? Do you have those songs downloaded on your phone? Can you, cancel that subscription? So things like that, try to lessen your monthly expenses through subscriptions, especially if you have a lot of them. Right, so look at your subscriptions, that's the first tip, try to get rid of them. The second tip is to find a hobby in which will eventually make you money. By this I mean, if you like making these artsy little braids that hang on a wall or something, then make an Etsy page and try to sell them. Don't just make them for yourself. You can definitely try to start selling things like that. Or if you're into woodworking, why not advertise your skills online and try to get picked up for an odd job here and there. In the description below, I'll definitely toss in some links to websites where you can advertise your skills, or if you're a handyman, or if you're into IT, it doesn't matter. Whatever it is, you can advertise on these websites. And if someone in the area is looking for those skills and you have it, they can essentially hire you to do that odd job for them. So I'll put those links in the description for you guys to look at if you're into building or woodworking or whatever it is, things like that. But there's more than just that. So if you're not into building or woodworking, you can, say you're into writing books. Well, Amazon's Kindle service more or less allows you to write and publish your own books, and you can sell them for $2, $3, whatever it is. If you wanted to write short novels or fantasies, that's something you can look into, because it gives you that option to eventually make money off of it. So another way you can stop living paycheck to paycheck, a little bit more risky maybe. I don't really know how comfortable you guys are with your bosses, but if you have a job and you're kind of stagnant at the time, ask what you can do to get a raise. What responsibilities can you take on to earn more money in your paycheck, right? Some people get uncomfortable with that conversation, but why not try it? If you've been at the same job for a couple of years but you haven't had a raise, start poking and prodding with your management. See what you can do to, elevate yourself personally, right? Because it's all about personal growth. The more you grow personally, the more money you will eventually make, right? It's all about confidence. So those are some ways to live, not paycheck to paycheck. And if you are, I hope you can find a way to, kind of mitigate that the best you can. So once you stop living in paycheck to paycheck, the next step before you start investing in, next step in personal finance is you have to invest in yourself, okay? So first, you stop living paycheck to paycheck, and then with your extra money, you pay yourself first. So it doesn't matter if it's 3%, 5%, or 10% of your paycheck. You just want to make sure that you are paying yourself, right? You don't want to just earn money and then blow it on the latest iPhone or the newest upgrade to an Apple Watch, right? Make sure you pay yourself first, especially if you're interested in investing. Make sure you put that money aside to where you can eventually use it for future things, right, money-wise. It also goes for, paying yourself, pay for your hobbies. If you're looking into woodworking, well, maybe you need to buy like a tabletop saw or a nail gun. Those are the types of things you want to invest in yourself with. So that extra bit of money that you're earning, it goes towards your hobbies, goes towards, investing, education, things like that. So before you, take homegirl out to a $200 dinner to Melting Pot, make sure you're paying yourself first. You're investing in your future. You're investing in your personal growth. Right? That's important. So the third tip of personal finances I want to give you, and I know a lot of people kind of skip this one, is having an emergency fund. But I'll tell you why emergency funds are so important. Say that your transmission in your car goes out, and for some reason all your money is in the stock market, but you need a car. So what's going to happen is you're going to end up taking all your money out of the stock market, or however much it takes to replace a transmission. You're going to pull it out of the stock market to replace your transmission. But let's say the stock market is down that week or that month, and you end up pulling your money out when it's all red. Well, then you just wasted even more money on top of your transmission by pulling your money out of the market at the wrong time. So having an emergency fund is very important because it helps, mitigate those kind of risks. Typically, you want 3 to 6 months of expenses, saved up. So let's say your monthly expense is $1,500. At a minimum, in your emergency fund, you want $4,500. At a comfortable maximum, about $9,000. I know $1,500 is, it's kind of cheap for monthly expenses. That's like some people's rent, right? So case by case basis, right? So whatever your emergency fund should be, you should start aiming towards building that. I'm not saying before you invest, you have to have $10,000 saved up in an emergency fund, but you definitely need to be putting money away into an emergency fund, okay? That way you can have something if something happens. So I think those are the 3 things more or less for your core finances. Don't live paycheck to paycheck, invest in yourself first, and have an emergency fund. All right, once you have those 3 things down, then I think it's safe more or less to branch out into investing. The second part of this video is, where do you start? How do you start investing? Do I want long-term growth, short-term growth? Where do I want to start? Typically, right, people want to invest long-term for retirement or for a kid's college fund. Long-term investing is a little bit easier because there's some very basic strategies that you can follow that are pretty mindless, right? You just put money in somewhere and you leave it and don't worry about it. If you're into short-term financing, we're gonna have to do a day trading video for you, and I can hopefully, get you started on making money in the short term. It's definitely a lot riskier, but it's what I like. It's exciting, it's fun, and hopefully one day, down the pipe, I can put out a video for day trading or some risky strategies that can make you money today or tomorrow or in a week or a month versus several years. But for this video, I'm more or less going to talk about some long-term strategies versus short-term, because short-term will be much more in-depth and a little more complicated. Okay, so there's something called dollar cost averaging, right? Pretty basic strategy you can use. All this is simply putting your money into an asset periodically without worrying about what the price is. So for example, let's say I put $500 per paycheck into Coca-Cola stock. And I don't worry if the stock is $42, $46. I just put the money in every paycheck, every time I get to. And what this does is it mitigates the volatility of the stock. It kind of gets rid of the risk behind it, because all you're doing is putting money in and not worrying about it. And it doesn't matter, because you're gonna pay for inflation and everything else as well. It's all gonna build on its own. You wanna do this with a stock that pays dividends, because you can do something called a dividend reinvestment plan. And every quarter, right, or whenever the stock pays its dividend, it goes back into that fund or that asset. And that's very important, right? Like, you want to have your money invested, right, earn you money, but not only that, you put it back into that asset that you're already making money off of. You're almost like double dipping at that point. A good way to start is just dollar cost averaging. If you just want to do, $500 in an asset every month or every 2 months, it doesn't matter, right? You just want to make sure you're putting your money into something that will grow and make you money in the future. Something else that works well with dollar cost averaging is mutual funds, ETFs and indexes. Something super easy that you can do is just find an ETF or an index that you like, and you can put your paycheck or a portion of your paycheck into it. You can just set it up with your bank. Hey, I want $100 every month to go into my mutual fund. It's super easy to do, and you don't have to worry about it. Your money just goes there. You can just leave it, and it grows for you. It's super easy. And what's good about ETFs or exchange traded funds is it provides like immediate diversification. Okay, so say you put I'll put some ETFs in the description for you guys to look at, so you can kind of get a few that I'm talking about. But just say you buy the Vanguard S&P 500 ETF. That's going to give you a diversification of however big that portfolio. It could be 100 stocks, 200 stocks, and you're just buying a portion of each of those stocks, and the ETF is going to match the index that it follows. And this one, it follows the S&P 500. So however that does, you will end up doing. Normally most indexes, they can return anywhere between like 6 to 10% per month. So definitely not awful. It's way better than a savings account, which gives you like 0.08%, and if you have a good bank, maybe 2% of returns. So those are just some options for long-term investing. That's super easy. You don't have to put any thought behind it. You just take a chunk of your money, toss it in this ETF, and just forget about it, right? Because you don't want to pull money out of the market, because then you're liable to taxes and all kinds of things that you don't want to deal with right now, because you're letting your money grow, right? So those are some super basic long-term growth strategies that you can use. Just dollar cost averaging, toss your money into an asset, leave it there, and just build on it monthly. It's going to grow for you. There'll be a couple in the description for you guys to look at that I'll put in there for you. Something else that's similar to ETFs is something called a real estate investment trust. It's very similar to an ETF, except instead of a stock, it just tracks real estate. So if you're interested in like real estate and buying houses and all that, a real estate investment trust allows you to buy like bits and pieces of the real estate market, whether it's commercial or land, you get like bits and pieces of it. Those are something you can look into if you want, if you're big into real estate. So those are your safer options for investing. If you're kind of timid, you don't even know where to start, but you want to start, you can start doing those things and see how it works for you. Some riskier strategies, of course, right? So inexperienced day trading, inexperienced option trading, penny stocks, futures, currency swaps. Those are all way riskier than dollar cost averaging and just tossing your money in a stock or an ETF and just leaving it. Right? Because if you do day trading wrong, you can lose all your money pretty much in a day. Right? It would be terrible. Same with currency swaps, same with future contracts, same with options. Options are huge right now. I see a lot of people getting into them. I'll probably do a pretty in-depth video on option trading just to help you guys out if that's something you're looking into. The way the market is with COVID and everything, they're not the worst option, but if you do it wrong, then you're gonna lose all your money. The purpose of all these videos is to help you guys get ideas for investing. So I plan on doing videos for day trading, option trading, futures, currency swaps, all those different things, and hopefully, kind of get you guys straightened away. So let's do a quick recap real quick. I know I covered a lot of information. So first, don't live above your means, right? That's never good. Don't live paycheck to paycheck. Try to find a hobby that can eventually make yourself some money, whether it's building something, if you're like, I don't know, refurbishing furniture, put it on an Etsy page, you know, it doesn't matter. Just try to find a hobby that you can use to help make you money down the road. Second, pay yourself first. This is also super important because if you don't pay yourself first, well, then you'll have no money for your hobbies, for your investing, you know, whatever it is. So personal growth, super important for this. Next, build an emergency fund because without it, you're just going to use all your investment money to pay for emergencies. 4, dollar cost averaging. Definitely look into it if you want to find somewhere to start. I mean, that's where I started. I just started tossing money into Coke, letting it build, and you make a little bit of money. You can pull some out. You can put in a different stock if that's how you want to start. But definitely a good place to start if you just want to get your money out of your savings account and, you know, kind of starting to build on its own. Next, just be wary of risky investments, right? Don't start day trading with $25,000 if you have no idea what you're looking for, right? If you don't know the fundamentals and technical analysis, don't jump into day trading because you're going to get massacred. So let me know in the comments if you would like to see anything in particular. So joke of the day. Why don't ants get sick? All right, let me know in the comments, like, subscribe if this tickled your fancy, and yeah, see you guys next time.